But Brian, thanks so much for joining me today. I'm excited to have a conversation with you.
Yeah, likewise. Thanks for having me.
So to kick things off, we've chatted a few times, and there's a lot of conversations around debt, financing. Bigfoot is definitely a major player in their space. I guess to kick things off, how did you start Bigfoot? What does it focus on? Just a general overview of your company.
Yeah, so started Bigfoot a little over 4 years ago, January 2017. And so that was kind of on the heels of the previous 13 years. I had spent kind of split across investment banking, helping really sell, interesting, micro-acquire, helping
Yeah.
sell primarily lower middle market businesses. So companies doing kind of 5 to 20 million in revenue, maybe 5 to 10 million in EBITDA, something like that, selling for 50 to a couple $100 million. So I spent about 5 years doing that, primarily outside of tech. And then in 2010, decided I wanted to be an operator and joined my first startup as employee one. So did that. Then I started a company, an enterprise software company. And then
Wait, well, we gotta go back. How did the startup work out? Were you employee number one?
It's no longer around, but it worked out all right. I mean, I think there was a lot of learnings there, and I think with that company, for me specifically, it was the two founders and I joined and wore all the hats, right? And I think that company, the guys brought some domain expertise, and I think execution was just kind of a problem along the way in terms of, okay, we built a product and it was a marketplace model. We built the supply side, which is arguably quite easier. Building the demand side was a different story, and kind of building that machine. And I think it was a relatively lightweight technical product that was way overly engineered and invested into. So and we raised some venture capital for that company, and ultimately it didn't work out, but that's okay. So I left that company and thought, hey, I may want to do this my own at some point, and kind of become buddies with the primary engineer and the devs. And I went to a coding boot camp, actually one of the first ones out in San Francisco. Not really with the thought of being an engineer myself, with the thought of, I just saw a lot of money dumped into something that probably didn't require a lot of money to be dumped into it. And engineers are happy to, be paid and build stuff, but not always the best thing to do. So I did that, and then came back and worked as a Rails engineer for like 2 months, and then was presented with an opportunity to lead a company, not my idea, a company called Brandfolder, which fast forward to about 6 months ago, had a really successful exit to a company called Smartsheet. And it was great, right? But
Nice, congrats.
I spent thank you. And I was, I guess, 30 at the time, and was like, okay, cool, I'll be a CEO. But didn't know what the hell I was doing, right?
No one does.
No one does.
No CEO does.
And so a ton of learnings there, and doing a lot of things wrong, and sitting in the office at midnight reading The Struggle by Ben Horowitz and just being like, yep, that's me.
That's one of my top 10 favorite books.
Yeah, the book's amazing. So anyways, did that. And that was really cutting my teeth in a different seat, operationally speaking.
And so now you're in debt. How did
Now I'm
like I love your journey because you have so much breadth of experience. You were in investment banking. You've been through, a startup, like the ups and the downs. Then you had, a win, and now you're.
Yep.
Maybe I just kind of cut you off and
No,
I want to hear about how did you get to Bigfoot?
And it's kind of like, why debt, right? And so I think, I raised equity capital for kind of the first company I mentioned, and then we raised some for Brandfolder early on, pre-product, pre anything really. And had a bunch of peers and folks I know that had kind of done the same. But growing up, cutting my teeth in investment banking, doing M&A transactions, there was always a capital structure, a capital stack, right? And it was very not just, hey, let's go raise a bunch of venture capital and blow up, good or bad blow up. It was just a different way to kind of construct the capital of a company, right? Which would include some equity, would include some debt, would include various components of debt and types of debt. So I was very familiar with that construct, and that didn't really exist in early stage software, right? Where I ended up spending my next kind of 7 years, right? It was all angel venture or nothing else, right?
When did you start Bigfoot? What year?
2017. So,
nice.
I just kind of thought well, why can't you lend to these companies? There's got to be another path, right? And I'm not the only person who's thought that. And obviously now there are other players. And at that time, there was really the only one I could find was Lighter Capital, who had been doing revenue-based financing for a while. So I spent some time kind of, digging into what they do, and then basically said, all right, I think I'm going to try to do something somewhat similar and focus on these early stage software companies where I've been an operator. Simple as that, right? And then was just kind of off to the races and had to convince some other people that that wasn't asinine to lend money to companies that are oftentimes losing money and have no kind of traditional assets. So was able to do that, and then we just started kind of doing our thing. And so fast forward to today, and we've put out about $18 million in loan commitments to 22 companies. So that's what we've done. Recently, we kind of institutionalized our own capital. So now we've got, more capital to kind of keep doing the same thing.
Nice. What would you say like a perfect fit for Bigfoot Capital is? Because I know every, financing based company kind of has their sweet spot, whether that's by vertical, revenue.
Yeah.
Is there like a certain sort of criteria that you look for with Bigfoot?
Yeah, I mean, there's a whole host of them, right? But I'd say we will operate with companies as early as kind of 75K in MRR, so about $1 million top line businesses, all the way up to kind of the furthest that we're involved with currently is like a $15 million run rate, right? I'd say our sweet spot, generally speaking, is kind of the $2 to $7 million top line companies, growing nicely, may or may not have raised some outside venture capital or other equity, but they're in growth mode, but they're looking to understand how to fund that growth in a multitude of ways, right? And so for us, we're trying to understand how we align and with that growth plan. And if we do, then it's fairly straightforward. So we approach it quantitatively, of course, and then we more qualitatively look to understand the business and what it's doing, right? And so that's what it boils down to, man. I mean, you can run a lot of stuff through models and algorithms, so to speak, but for us, putting out $500,000 to $2.5 million, we're not that group looking to fully run everything in some automated fashion and give money in 24
Nice. So you're like a little bit more selective. Like you will issue, it sounds like larger loans, companies that have clearly identified a predictable growth model, and that's what you finance rather than, the really, really early, micro acquire size type business.
Yeah, for the most part, right? I mean, we're toying with the concept of, look, if we can get into companies a little bit earlier in a kind of reasonable format, right? Not put too much debt on them and grow with them, that's great, right? Like at the end of the day, we're growing this company that's only 4 years old, oftentimes alongside the companies that we're funding. So I very much view us as a peer. And what we're not trying to do, while we're certainly trying to grow, we're not trying to just be transactional, right? Like relationships matter to us, and we run a fairly concentrated portfolio that we can pay attention to and support.
Nice. What would you say your favorite portfolio company is? You don't have to say their name, but like, can you say like the situation, how you met them? Because there's always this like, I think a lot of entrepreneurs, maybe not so much as say when you first started Bigfoot, venture capital was kind of the only way to fuel, growth of your startup, and debt is starting to become more, I guess, normal as a way to fuel companies' growth. But do you have like a story of like an entrepreneur, maybe they were thinking of venture and they ended up, raising through you, and now they're just something that you enjoy sharing?
Yeah, I mean, I think there's the company and then there's the people, right? So for us and for me, maybe specifically, it's pretty personal, right? So I kind of mentioned as a peer, right? And so it's folks like you that have grown businesses and are growing businesses and have, have some experience, and it's not necessarily their first rodeo. And there's always like more of a personal story to it, right? People have families, people have objectives personally, and their business is a vehicle for that. That's what I like, right? And so I can think of the certain founders that bubble to the top of my head where it's just like Donnie's an awesome guy, right? I'm gonna go to bat for Donnie any day because I know he's hustling and I know he's, just a great guy, right? Who's working to grow a business. And Donnie's raised a little bit of strategic equity capital and is probably on that VC path. But if we can play our role kind of in the interim and help him get to that, that's great, right? I can think of Mike down in Arizona who had also raised some venture, and I'd met Mike like 3 years ago, and then ultimately we ended up working together and put $1 million into his company, and he sold it to a strategic, right, and increased his valuation by like 60%, and boom, awesome, right? And now
Not bad, not bad.
the money with us, right? And so he's
Yeah.
playing supporting folks like himself, right? Not necessarily directly, but through us. So that's awesome, right? So we have those types of stories that for me are just great.
I mean, yeah, what you're doing is you're, helping them retain equity. So when they go to exit, they get to, capitalize a lot more on that liquidity event. So that's awesome. I guess my next question, in terms of like debt-based acquisitions, I've asked you about it. I get asked all the time. What's your thoughts on that model? Is it something that you see in the future for Bigfoot? Is it something that you've explored or thought about? Like, what are your thoughts on like if someone came to with like a $2 million company or whatever criteria fit? How would you think about that?
Yeah, I mean, so the first financing I did in this space, which actually predated Bigfoot, was an acquisition financing. We called it a SaaS position, which then led to Sasquatch, which then ultimately led to Bigfoot. So that's how we even named the company.
I was gonna ask you that. I was like, I wanted to know. So that's how you thought of the name
That's
Bigfoot?
how it percolated into Bigfoot, which whatever.
So it was SAC position and then Sasquatch and then Bigfoot.
We've done it, right? But I'd say, we haven't deployed it in any strategic manner yet in terms of, say, an acquisition financing product. It's something that comes across our radar and companies ask about it. And sometimes the companies we fund may, tuck in an acquisition. So yeah, we're definitely thinking about it. And of course, you and I have talked about it. So it's how do we go about kind of productizing it, let's just say. Um,
Nice. So if someone had a deal and they wanted to see if they were a fit with you, what would be like the three bullet points if you had like revenue threshold,
yeah.
churn number, even do you have any sort of like numbers that you could share just of this maybe makes sense and obviously they can reach out to you to see if it does?
Yeah, I mean, for us, kind of the very high level filter is, are you US based? Do you have some software product you're selling to businesses, right? In whatever format. Doesn't have to be pure play SaaS. It can be a marketplace, can be metered pricing, usage based, whatever, in terms of how you run the revenue model, or even tech enabled services. But there has to be some core software component to it. And then kind of that 75K, MRR I mentioned. Those are like, US based B2B software, 75K in MRR. And then, we really like to understand, what are you using the capital for, right? Like, what is the plan here? And can we give you enough to make it make sense? For instance, if it's, okay, we can give you $500,000 and you're going to burn through it in a month, that's not us, right? Maybe
Yeah, that
someone.
makes sense.
So, and then a lot of derivative things lying there under. But we'll chat with anyone that kind of ticks those first three boxes. Have a quick conversation, see if it makes maybe sense to evaluate, and if it doesn't, try to lead them somewhere productive.
Nice. That's helpful. I guess to kind of wrap things up, you talk to a lot of entrepreneurs, I'm sure. What are, for people listening that may be building a business, what's like your favorite business tip that you give?
Oh man, I think it's take the long view. Honestly, so it's, these things take a while. If I go back to Brandfolder, that was a, whatever 9-year journey to an exit. I don't know, remember with your previous business how long you spent, building that up.
It was like a decade.
Right. So take the long view, right? I think it's, which may sound obvious, but, and then have that manifest in the way you build your company, right? And so that's not, you got to move fast, of course, but not over optimizing certain things, not being too transactional in certain areas, looking forward while executing in the now.
Nice. Okay, I got two more questions for you because I'm just curious. What's your favorite business book? If you had one that like you were gonna be stranded on an island and you had to just bring one, what would it be?
Man, so the hard thing about hard things, which we touched on, was a really good one. I can't claim to have read like a ton of business books, but really like that one. Jim Collins. Oh man, what's the bus one? By Jim Collins. Could Google it right now, but
The Good to Great?
Good to Great. Yep. who you have on your bus. Good to Great.
Yeah, that's one of my favorite books. That's a top 5.
Really enjoyed, and what I tore through on my honeymoon back in 2015 was the Walter Isaacson Steve Jobs biography. Thought that was amazing. It's an amazing story.
Nice. All right, final question, and you might have just kind of given it away, but what entrepreneur do you look up to the most?
Ooh, I don't know if it's Steve Jobs. It's a good question, man.
And you can't say Elon Musk. Everyone always says Elon Musk. Even I say it.
Look, I think Elon's amazing.
He is.
In multiple regards, but I'm gonna have to get back to that on you. Get back to you on that one, Andrew. I think actually, one who I really like and a company I'm really bullish on is Twilio, Jeff Lawson. I think the way that company is being built and has been built, and the potential there, and the way he talks about the company and thinks about the company is super impressive. I don't know if he has a book. I think he actually does. I haven't read it.
I've heard a lot of good things about him, so I would agree with that. Well, Brian, thanks for joining me on this. This was a fun conversation. I hope everyone listening, if you're interested in, potentially saving equity and raising some debt, reach out to Brian. So, Brian, where could people get a hold of you if they're interested in learning more?
BigfootCap.com. It's a pretty lightweight website meant to get people to my calendar.
Right on. Well, Brian, great chat. I appreciate it.